Hello, my name is Armin Wada. I'm a global FSI architect at Red Hat and Red Hat's EMEA FSI technology lead. Today I want to talk about digital assets and in particular about new forms of digital money. So there is a new trend that's very strong in FSI currently that's about stablecoins. Stablecoins are some kind of cryptocurrency, crypto money, but in contrast to Bitcoin and other cryptocurrencies that are mainly used for investments as speculative assets, stablecoins are, like the name indicates, a stable form of cryptocurrency which is not fluctuating in their value. So they are supposed to be stable, and this makes them very useful for payment use cases. Stable coins are just one form of new digital money that are currently starting to disrupt the financial services industry. The other forms of digital money that we are seeing being developed in some regions are, for example, central bank digital currencies, like the digital euro in the European Union, which is being developed by the European Central Bank, together with the national central banks of the European countries. And then there are also some private initiatives from commercial banks, which are similar to stable coins and CBDC, and they are called CBMT. So CBMT stands for Commercial Bank Money Token, which means it's a form of tokenized bank deposits. So CBDC, being central bank digital currency, is like a stable coin issued by a central bank, while CBMT is like a stable coin issued by commercial banks. Yeah, and then of course stable coins can be issued by a lot of private companies. The most popular stablecoins currently are denoted in US dollar, for example, like USDT, Tether, or USDC. But there are also stablecoins donated in other currencies, for example, in the euro, for example, the All Unity Euro stablecoin, which has been issued last year. Yeah, why are these new forms of digital money, stablecoin, CBDC, CBMT, interesting? Why do banks now looking at how to embrace services with these new forms of digital money? It's because their customers are asking for it. Banking customers, especially in the corporate banking, want to be able to also receive payments in these new digital forms of money and to make payments in these new forms of digital monies. So while this technology and these forms of money are existing already for quite a while, it's now where things are getting serious. Things are moving from experimentation and these new technologies become embedded into the traditional financial systems. So customers are now asking their banks to also offer services for these new forms of digital monies. Services, for example, like custody of these digital assets, but also transactions like transfers of these digital assets to other owners, settlement, exchange, analytics, reporting, sanction screening, risk management, financial crime detection and prevention, and so on. So all these surrounding services of traditional financial services also have to be applied to the new forms of digital assets if they have to be compliant to regulations. There are two major regulations currently which are relevant for the financial services industry. There is a Genius Act in the US, and there is a MiCA regulation, the Markets and Crypto Assets Regulation in the European Union. There will be more similar regulations in other regions in the next time, which are being worked on. So why are customers actually asking for services around these new digital forms of money? Why are these interesting for customers? The main advantage for the corporate customers of banks are lying in the speed and efficiency of cross-border payments, which can be facilitated with those forms of digital money. So the use cases are mainly in wholesale use cases, where, for example, one company buys some stuff from another companies, and the two companies are not sharing the same bank, or maybe their banks don't have a direct relation, and so it's quite difficult to do a payment from one company, let's say in Latin America, to another company, let's say in APAC. Today, those payments are most of the time executed over the correspondent banking system, where the payment has to be forwarded from one bank to the next bank until it reaches a final destination. And this can be very slow. This can take days, maybe even up to a week, until the money reaches its destination. And so stablecoins, they are now promising speed. They can execute those payments in minutes instead of days. And because they are using new technology like distributed ledger technology, also known as blockchain technology, they can also offer a high degree of standardization and automation, which is also relevant. Automation being executed through smart contracts. And thus you can have automated reaction when a payment is received or payment is made, which is happening and executed on the distributed ledger technology. Yeah, why do customers want these services from their banks and not from some other fintechs? It's mostly about the trustworthiness. The customers also want to be sure that when they are using these new digital assets for payments, that the risk and compliance is applied to these like they are in the traditional finance. And of course, they also want all of this integrated with their traditional financial services, for example, account management and payments. So today we see a lot of initiatives globally which are launching stable coins, commercial bank money tokens, and also CBDC, central bank digital currencies. For example, last year at the big Cybers conference, Swift also announced that they will be entering this game, and they are going to create a Swift DLT so that Swift remains relevant in this kind of new money logistics. Besides these wholesale use cases, there are also retail use cases being discussed. These are not so relevant for the stablecoins, potentially more for the CBDC and CBMT, because they are targeting use cases which are today mostly being executed on credit card networks like Visa, MasterCard, or with app-based payments here, Apple Pay, Google Pay, PayPal, and so on. So this might actually be more the field of the CBDCs and CBDCs to offer alternative which is more cost effective, but potentially also be more sovereign, because these systems like CBDC and CBMT are mostly built in region and might not be using US technology. So why is our technology here relevant for this topic of digital assets? Yeah, it's because these new systems are usually built on enterprise open source, which gives you the trustworthiness and transparency of these systems, which is very important. Secure software supply chains are important to develop these applications, and also confidential computing, which can offer the highest degree of security, protecting these digital assets from spying and leaking. Confidential computing offers in-memory encryption, which is extending already existing concepts like encryption at rest and encryption while data is being in transfer. Interoperability and portability for apps which are used to do custody with wallets and transfers of these digital assets are very important. So it's quite good to choose a platform which is available in any cloud, public cloud, sovereign cloud, private cloud, which can use any compute architecture like x86, ARM, Z-series mainframes, power GPUs, and which can support any kind of application architecture like containerized virtual machines, serverless, event-driven, and so on. So I hope you found this interesting, this short overview about digital assets and what kind of technology is relevant, why customers want it, why banks are now embracing it. And happy to reach out to me to have a discussion about it. Have a nice day.